My guest today says that if history is any indication, a Biden presidency and a divided Congress may very well be the best bet for equities. He is Frank Holmes. He is the CEO of U.S. Global Investors, and he joins me now from San Antonio. Frank, good to be back with you.
Hey, it's great to be back with you. And absolutely, when you do data mining, you look at macro factors going back 50, 70, 80 years, what you find, what is the best political situation in America is to have a Democrat president, have a split Congress, but a Republican Senate. Mm-hmm. And what happens is you get less taxation, less regulations, and usually smarter taxation and regulation comes through. And that's great for the stock market. So if you're not long, you're wrong.
So let's talk about best places to be, worst places to be. Let's start with airline stocks, since this is obviously through JETS, your ETF. You know a lot about this. Are airline stocks the best bet right now?
Well, they're one of those great bets when you play tactical big rebounds. And historically, after 9/11 in New York City, SARS in Asia a couple of years later, the crisis of 2008, 2009, a year, 6 months to a year later, the airlines as a group rebounded 80 to 120%. And during that run, you had 4 corrections. So we've already had we had a huge surge in June, had a correction. Now we've had the second big run up. It's easy to have a correction, but I think they trade higher.
So do we want to avoid we saw with the news of the vaccine, do we want to avoid the stay-at-home stocks that profited so much from the pandemic?
Well, what's interesting is you saw just an individual airline was Hawaiian Airlines jumped 50%. Because there's lots of people short these airline stocks. And we have found that they go long jets and they go short of stock. They just think the financials aren't there. But what's happening is that the business travel is not exploding for many reasons. International travel is pretty well still cut off with Europe, but domestic travel is picking up, but not business.
Right. It's
Tourism. United Airlines never had nonstop flights from Youngstown or from small cities throughout Ohio, Indiana, Illinois, Pennsylvania, New York State to Fort Myers. And we saw Southwest Airlines just start last month from Phoenix down to Cabo San Lucas. So we're seeing tourism is up and going south to get out of the colder weather. That is picking up, and the airlines are reconfiguring how they and where they're flying.
And it is really interesting. And I have many friends of mine who, they say I could remote work from home anywhere. So somewhere in, Florida, Miami, California, why not? If, especially if you don't have kids yet or you have that freedom, I agree with what you're saying. But what about, the stocks like the Zoom, like Skype that did so well with the pandemic? Would you avoid those, or do you think it's going to take a while before we see those get hit hard?
No, I wouldn't avoid them because I think they're just going to improve their delivery, their experience, and I think it's going to be used more and more often. And when we get to the next big sort of global boom, that this will just add to it. It'll add a greater productivity in GDP per capita running. But what's interesting for me is, as you know, I write every month about it, these purchasing manufacturers index, because it's a leading indicator. Well, the US and China are 40% of all global trade, and they're tearing it up. They're just exploding. Like JETS had a big surge this week. Well, so are PMIs, which is very positive for the next 6 months. Europe has said they're going to spend another $1 trillion making sure that they get their economy turned around because of the lockdowns. So I think we're in a very bullish cycle. And what I wrote about last week was that this, if you look at the math, that the odds favor the market will be up in November, the market will be up in January, and all the way through January. And if you have rising PMI, it's a bull market.
Frank, let's bring it home now. Let's talk gold. Many investors disappointed that gold, as we're speaking right now, not rallying higher. But we're trading in the context of a stronger U.S. dollar right now. Long-term outlook here for gold.
It's a great buy. When you get gold down 5% in one day, the daily sigma, the daily volatility of gold is 1%, up or down, 70% of the time. When it falls 5, it's a buy. And we'll take a look at these companies and announcing of their earnings. I mean, we're talking about rapid growth and dividend growth. I think the universe we follow is growing almost 100 gold stocks around the world. They're growing their dividends at 25%. The universe in Go AU is more like 35%. Newmont, Barrick, they're just tearing it up. So I think that you're going to see this industry class as gold is going to continue to go. And this other model of MMT, modern monetary theory, it's not going away. They're going to keep throwing money at it. So every time you get these corrections, buy them. Gold is in a secular bull market.
Frank,
and gold stocks.
Yeah, well, I want to just end on this note. Gold stocks. You are, sit on the board of many mining companies. You really know what's happening in the mining world. Are we seeing a lot more exploration happening? Are people going out and search for that next great gold mine? And how far away are we from finding it?
Well, I think we're a good distance away. There has been more money speculating in this space, with more millennials coming in and speculating. But I don't really see it taking off in huge numbers. I know that there's more interest in those names, and the dollar amounts being raised are great, but nothing like 2011 when gold hit 1900.
Not yet. Interesting.
We're not there yet.
All right. So a lot of room to grow.
Yes, for sure.
All right. Frank Holmes of US Global Investors. Come back soon, Frank. Thank you for your insights.
Thank you. And go, go.
All right. And thank you for watching. We'll have much more for you on Stansberry Research. So be sure to stay tuned. In the meantime, you can follow us on Facebook, Instagram, LinkedIn, and Twitter. We're all there. Thanks for watching. I'm Daniela Cambone.